Hierarchies allow us to drill into details when we want to roll up more granular values for higher level reporting. So in Workday, the term hierarchy replaces the legacy term we know as trees and nodes. So hierarchies allow us several things. It allows us to roll up values to a higher level for reporting. And this is a good example of that. So you can see these red boxes. These are actually individual cost centers. But I might not always want to go to the most granular level when I'm doing reporting. So maybe I just want to do reporting at engineering. So that means in a report, I can pull engineering. Or maybe I want to look at just Knowlton School of Architecture. So I can just pull that versus going down to the lowest level cost center. And then maybe sometimes I do want to go to the cost center itself. So in the report, you have that capability. So all hierarchies do is roll values together to a higher level to allow us to select those levels in reporting. They also allow for different organizational roll-ups. So maybe I want these two cost centers to roll up to Knowlton School of Architecture for one reporting purpose, but maybe I need these two cost centers to roll into another roll up because depending on the reporting I'm doing, it might have two different needs. It also supports security. So if I have a senior fiscal officer that I don't want to have to assign them to every single cost center, I can assign that senior fiscal officer role to the hierarchy of engineering, and they automatically are over all these areas. So it allows us to assign security at a higher level. Cost centers and balancing units have very distinct hierarchies. The levels actually have meaning, but they do vary by company. So for instance, CCH6 for UNIV represents the VP Dean level. The meaning for each company will be provided in other FDM training materials. So Arena is now going to show us how we can leverage these hierarchies in Workday reports.
On my screen, I have the sources and uses variance analysis report that we looked at earlier. But now I want to focus on a different point about it. As I scroll down on the report, on the left-hand side, you can see that I extended the uses section. Here you see various subcategories, and this is based on the ledger account hierarchy that has been developed. So this helps you group your expenses by like categories to help you figure out which area you want to analyze. If I expand the salary section, it goes into a little bit more granular detail around various salary ledger accounts. I can also look at the number, and then again, I click on the arrow, and I can pivot it by a spend category. Salaries are an expense ledger account, so we know a spend category has to be used on the transaction. So here you can see that there are 31 various spend categories that were used in various transactions, and this gives you a little bit more granular detail about how the money was spent. I can do another level of pivoting to see more granular details about the data. So I'm going to click on this first spend category, and I'm going to pivot the data by cost center hierarchy. I'm actually going to focus on the cost center hierarchy level 8, and you can see we allowed you the flexibility to look at the data by various cost center hierarchy levels. As I look at this, there's only one cost center hierarchy level 8 that all of the transactions roll in. It's called academic department. But maybe you want to now look at all of the cost centers that roll into the academic department that make up this balance. I can click on this number one more time. I'm actually, so this will give me the most granular level of detail in every transaction down to the journal line. But if I pivot it by cost center, I can see that there were 6 various cost centers that made up that total balance that rolled up to that cost center hierarchy. So as you can see, hierarchies are very helpful for you to look at the data at a higher level and then roll it back down to the details to help you figure out how the balances make up for your college. Another report I want to show you is a balance sheet and how hierarchies work there. So this is the same managerial balance sheet we looked at earlier, but now I am going to run this report by balance unit hierarchy for the professional colleges. So here you can see numbers, and we want to look at it in a little bit more detail to figure out how the balances are split across various professional colleges. So we're going to, again, look at the current assets section. We're going to click on the arrow next to the number. And we're going to pivot it by balancing units. You can see there are 120 balancing units that make up professional college. This is helpful for some people when they're running a report at a high level. But if you're trying to run this report for your particular unit, you have to be careful that you select the right value when you're running the report. So when we go back to the prompts of the report, we are actually going to switch and run this for engineering only, because this is what we intended to run it for. So again, balancing unit hierarchy level 6 is equivalent to your VP Dean level. So I'm going to put this in the search, and it populates with the right value, and I'm going to run this report. And I can see that these numbers change. Again, when I pivot on the number and click on the balancing unit, I can see it showed and brought back only the engineer ones, which is what I intended to run this report for the first place. So knowing your hierarchies and how data rolls up is very important to make sure you're able to run reports for the right data to help you with your day-to-day analysis.